Hey, hope you're having a great day so far. Today is January 8th, Friday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, before diving into Yearn Finance and Balancer, YFI, and BALUSD, and see what exactly are going on in these two markets since the last time I've spoken. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on these markets, according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks upon a successful sign up and a qualifying deposit, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculations opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I will get to them a lot faster that way. Let's see what exactly is going on in the markets first. Most importantly, I do like to take a look into Bitcoin dominance. It tells me where the money could be trending into, whether it be Bitcoin or altcoins, generally speaking. Currently, I do see that since a few days back, I have not noticed this pattern, but was actually a rising wedge pattern that has formed, and that the price action has actually broken below that rising wedge pattern on Bitcoin dominance. The breakout target was about 68% out of this rising wedge pattern, which is a bearish pattern. Price action on Bitcoin dominance has actually gone as far as about 67.6%, almost, before bouncing back up. And as you guys can recall, on the past few days, I was actually looking for price action here on the Bitcoin dominance daily time frame to be rejected by the daily 21 simple moving average. This tells me that Bitcoin dominance will actually continue trending downwards. In this case, I would be a lot more confident trading altcoins, generally speaking. However, right now, price action has gone back on top of the daily 21 simple moving average. And right now, it does seem like it could be forming some type of a head and shoulders pattern. If the price action can actually close at around 71%, then I would be more inclined to think that this is a head and shoulders pattern, which is a bearish pattern anyways, and could lead to Bitcoin dominance continue trending downwards. So I'll be paying very close attention on the daily time frame. However, even if this does not play into a head and shoulders pattern, if the price action on the daily time frame goes as far as about 72.5% or even slightly higher, then I could still see possible bearish divergence on the daily time frame, which could still signal a pullback more often than not. Same thing on the 3-day time frame. This is what I'm looking at. However, the 3-day candle does not close in more than a day. So this is what I'm looking for next. Like I said, if Bitcoin dominance actually trends downwards, I would be saying that it is a lot better trading altcoins as opposed to if Bitcoin dominance trends upwards. Now let's take a look into Bitcoin price action itself and see what exactly is going on in here. Since yesterday, I did say that there was a symmetrical triangle pattern that was like this, and the breakout target was about 43K out of this symmetrical triangle pattern. You guys can actually take a look into my post yesterday and see what I said about Bitcoin price action. However, Bitcoin price action went as far as about 42K before actually coming right back down, and this could be because of a possible signal here of bullish divergence, comparing this high right here with this high, and then it pulled back to about the hourly 50 simple moving average. So a little more, it breached the 21 simple moving average here, which actually breaches my conservative estimate for bearish divergence. But right now, I do see that the price action could either be forming a rising channel pattern or a rising wedge pattern. I would need a little bit more data to actually to decide here. But right now, it does seem like more of a rising wedge pattern here, because the bottom trend line is sloping more steeply than the upper trend line, at least in my opinion. You guys let me know what you think. So we're gonna revisit this again tomorrow and see what exactly price action for Bitcoin is at and how that could affect the altcoin markets. However, something to be looking out for will be if Bitcoin dominance actually trends upwards and Bitcoin price action pulls back, like we have seen last night, just right, I believe right here. where it actually took quite a bit of the altcoins down with it. So trading or holding altcoins under these circumstances, when Bitcoin dominance trends upwards and Bitcoin price action pulls back, I would take what I just said into consideration. Now let's take a look into YFIUSD and see what exactly is going on in here first. So since the last time we have spoken, I did say that YFI was I think it was still right underneath some moving averages about the 25K zone, and I did say it would be bullish if the price action actually gets it close above the 25.5K area, because that was the fib level, and then it would be even more bullish if the Bitcoin price action can actually close above the 30K area. Well, since yesterday's price action, the daily candle has closed above even at about 33K almost. Okay, so in my opinion, this head and shoulders pattern that we have been trying to negate, the price action has been trying to negate, is in fact invalidated in my opinion. Now let's see what exactly the price action is going on in on a lower time frame and see what type of pattern could it actually be building. I want to focus on the 6-hour time frame here, where it does still seems like there is a ascending triangle pattern that is playing out right now. Ascending triangle patterns, 63% chance of it breaking upwards. If it actually does break upwards, I do have a conservative target of about 46.7K as far as I can read it. Okay, so that's what I'm looking at right now. Now, I also do want to point out on the 6-hour time frame though that there is still bearish divergence that could be playing out right now when I compare this top right here with this top. However, with lower tops on the RSI reading, that is bearish divergence. So if this actually plays out, my conservative estimate is that if the price action gets bearish divergence on any specific time frame, the price action would come back to actually meet the closest moving average on that time frame. In this case, would be the 21 simple moving average on the 6-hour time frame. Now, if the price action would the price action actually come all the way down to about 27K, which is what the moving average rate is right now, or would it actually consolidate within this ascending triangle pattern until the moving average actually comes up to meet the price action? Either of those scenarios are reasonable, but I do think the consolidation right now is more likely given the bullish sentiment in the market right now. It could also not even wait for the moving average before continuing upwards. If it continues upwards, if there is enough buyers in the market to actually push the price up from here. Okay, so that's what I'm seeing, and those are the possible scenarios. Now let's take a look into the bullish and bearish case scenarios for this market right now, given what I just said. The bullish case scenario here, if the price action actually breaks above this upward trend line, of course, that'd be the pretty clear bullish case scenario here, and then go towards its measured targets. Measured target, like I said, may or may not be reached, could also be overreached. Now let's take a look into the bearish case scenario. Bearish case scenario, if the price action actually breaks this bottom trend line, this tells me I may either have to adjust the bottom trend line here to fit a wider ascending triangle pattern, or actually invalidate this bullish pattern. So right now I do see that the hourly 50 simple moving average is the next level of key support, along with another time frame I actually looked at if the price action is in a new trend would be the 15-minute 200 simple moving average as well. So these are going to be the two time frames I'm looking at, and these are the next two key supports I'm looking at. On the 30-minute time frame, I don't see a moving average that could be acting as support that's close to the bottom trend line right now, so that is not it. And the hourly 50 simple moving average is pretty parallel with this current bottom trend line right now. So that's basically what I'm looking at right now. On the bearish case scenario, if the price action here actually breaks below this bottom trend line, then it does actually look like I would have to invalidate this ascending triangle pattern. As of this snapshot, it could change. Now, these are my bullish and bearish case scenarios for YFI. Let's take a look into Balancer, BALUSD, and see what exactly is going on in here. on balancer BALUSD, it has been running within a inverse head and shoulders pattern since September, which has been quite a bit of similar patterns with a lot of the altcoins that have just been so beaten up back in September and October. However, this price action has not exactly broken out for quite some time. I think the last time it actually had a daily candle close was about late November. However, that did not last. Currently, we have seen quite a bit of daily candle closes above this neckline of about $16.80. I picked that to be the neckline because that would actually connect most of the candles here, a consensus of candles, and actually incorporate quite a bit of moving averages, key moving averages, especially on the higher time frames, to be beneath it. Okay, so right now I do see the price action is actually retesting this neckline and see if that can actually hold. Let's take a look into the smaller time frames and see what exactly could be going on. I believe on the hourly time frame, what I am seeing is a possible double top pattern here with the neckline to be about $16.80, which is basically the neckline of the inverse head and shoulders pattern. I picked that to be the neckline here because I can actually connect both sides of the double top patterns here. I would actually say it could be actually right here instead. I think that would be more valid. So let me change the neckline of the double top pattern to be about 17 cents. Actually, I don't think that would be valid because I want to take into consideration of the neckline of the inverse head and shoulders pattern as well. So in that case, I think there's more confluence. You guys let me know what you think. So basically, if the price action breaks back below either the neckline of this double top pattern, which is the same thing as the neckline of this inverse head and shoulders pattern, I think that could be bad news. There is something also I want to point out though, is that on the daily time frame that there is bearish divergence on the daily time frame comparing this high with this high right here. And like I said, if I do see possible bearish divergence on a specific time frame, my conservative estimate is that the price action actually comes back or actually meets the closest moving average on that time frame. The closest moving average on this time frame, on the daily time frame, is the hourly 21 simple moving daily 21 simple moving average, currently about $14.40 right now. So this is what I'm looking at as a possible scenario. Let's see if the price action would actually go all the way down to meet this daily 21 simple moving average due to bearish divergence on this time frame. Now, that is my very short evaluation of this market right now. Let's take a look into the bullish and bearish case scenarios. Bullish case scenarios here, I would like to see that the daily time frame here, daily candles, actually continue to close on top of this neckline right here. This tells me that when the price action broke out of this inverse head and shoulders pattern and actually turned this resistance into support, okay? And if we actually continue getting daily candle closes above the support and not flip this support back into resistance, that is still good sign for the bulls here. Okay, that tells me that this breakout was actually still valid, as we did not flip this support back to resistance. That is the bullish case scenario. And if this actually plays out, I would actually expect the price action to go up more sooner than later. If the price action, the daily candle, actually breaks back below this neckline and get daily candle closes below this neckline, then we are basically flipping back this breakout and this support becomes resistance again, and there's going to be more delay in actually breaking back out of this pattern. Now, these are my bullish and bearish case scenarios for Balancer, BALUSD. Let me know if you guys found this post helpful. Give me a thumbs up if you guys did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.